when I do my top-down analysis looking at, for example, the Nasdaq, if I have not done this, it looks like it's flying. It's just breaking away. It's going very very fast, and it's going higher. I have done in the past, I have done a level which was here. If you noticed how the market moved, and I remember grabbing this level or talking about it in the past here for a nice bounce. It was amazing, but it broke it. Now, to me, the Nasdaq or this instrument that I'm looking at, it's still there. So what I did, I moved my Fibonacci to this high, and for the past week we had a level around here, and we have had so many bounces off of this area. Now what? Now some people say it broke this level, we might see it going to 14,200. This is not 100. So, but that's not the case. It could, because now if I do this from the legit high, we see it just touching the 50% retracement on Fibonacci, and in the past we see how it poked it, tried to poke up and poke back down. So to me, thinking long, it's completely wrong. It might come back down, it might go up. At this point, we don't know. We have to look closer. What do we do to look closer? Is to just scale down, right? So if I plot my line here, just for me to have a reference, because this will plot on different charts too, right? Here. Now I would go to the daily or 1 day, and I see this. I see that previously we had an exact level. Just pay attention to this area. These are things that you have to pay attention to. We had a bounce here. We had near bounce here. We had a poke here, and now we are sitting in this level. So thinking long to me is not a safe idea, not a good idea. So looking at a 60-minute chart, and the line is here, I will see if we could use this line here as a do or die level. So basically what I'm trying to accomplish with this top-down analysis or study is to find out what will happen in this line. So to me, this line is a do or die line, and if we have a down, you see the gap in this area could be filled easily with the move down, right? In terms of trying to catch a trade, first of all, it's not even 9:30. The markets are not open. Second, we have to wait. You have to wait for a good retracement. And looking at a even smaller chart, 1597 tick chart, you see the power lines, you see the DRLs, as you noticed here, accomplishing that idea of resistance. Whether you are bullish on it or bearish on this instrument, you have to give it a chance to determine what's going to happen at this line. Okay, it looks more bearish from the look of it, from the technical analysis and all that, but you never know. So you have to wait for something more solid to base your trade on. Okay, questions? Also, some of the instruments that would go hand in hand with the Nasdaq are the other indices, such as the YM, which is the Dow, or in the CFDs market or spot market is US 30. If you look at the daily chart, it is consolidating. It's not clear, but it's also not showing any strength, more weakness from the look of it. Another one is the ES SPX 500, right? If you look at the daily, it's not showing any evidence of strength or weakness in this case. So that's why I focused on the NASDAQ being more aggressive moving instrument, also giving me a level that is more clear. Okay. Here's another example of clarity. I'm seeing the pound, U.S. yen, actually U.S. yen, trying to break the previous high, and if I see my Fibonacci from first of all, I don't have to have Fibonacci's at this point because I see the level, which is continuation, and there's resistance right here, as you notice on the volume profile. You see the edge. So, but to plot Fibonacci's, it will give you more accurate ideas of where the next resistance will be. And I'm using this high, although I prefer the higher high. So let me plot a line here and see where's next. So to me, this looks like, yes, the US yen is bullish. If I do it from the previous high, and we see the 50% is sitting right on top of the previous line here. So we have a zone that could be a target before the next resistance that we will be facing. So what to do is basically logically switch back to a smaller chart and determine a level that you could choose to maybe take advantage of a long. Basically, you have to wait for a level that is supportive. Also, when that happens, you have to also find confirmations and just to minimize your risk. One of the things I like to do is to depend on volume profile. I would assume once we go into this continuation zone, maybe as a retracement, it might continue down. So I would find levels here, maybe even somewhere here if we have a good retracement Fibonacci. But we have to wait for it to come back down first before we think long or think trading, because bottom line is key. Your risk is key to your trading. Going back to the NASDAQ, folks, I see the retracement. So if I have to wait for a level, if I'm looking at a short, although I am not, I'm just neutral with the NASDAQ, I have to wait for a retracement. And one of the things I do is I still do my Fibonacci's and I plot my levels that I want to probably look at to confirm for a trade. For example, a possible short as you can hear me saying. So it is all about preparation. You see what happened? We anticipate something, but it's not necessarily committing to it. You always have to wait. The timing of the day was 9:30. 9:30 is when the market opens, so you should avoid timing like that. The other thing is that looking at a longer term, still you see the NASDAQ remains under the same pressure, because the candle or the movement is trying to poke but has not closed above it, even on a 60-minute chart or one day chart. You see the same. So now we are touching a level on the daily chart that might be more effective for our resistance area. You see this? Now we lift this, we lift the line here and see what we can get out of this. So now we are lifting our do or die, which was in this area, to this area. This is our new do or die level. Okay? The more evidence we have for resistance, the better for us. Gold, same thing. I'm looking at the gold, which is spot gold, and I see levels that are supportive on the volume profile. But if I plot my Fibonacci retracement or retracements from the bottom wave of the wave to the top of the wave, I see this area between 42 and 40 to be supportive. Meanwhile, we have the sell indicator also um, giving me that idea. So if we have the sell shifting lower and we have this power line and we might have other confirmations, we could benefit from that. And this is the benefit of analyzing the markets. So until these things happen, until the levels hit, you just sit back and relax. It is so important to anticipate the levels before you start your plan of attack. For shorter term trading, I will still look at the weekly to determining the trend, just like we did on the US yen. We realized it is a bullish move, and then we switched back to the hourly, and it started moving. You see, from this level, instead of it coming back down to fulfill my personal need, because I don't like to trade sideways, the flag, and then continuation. That's not something I do because of the risk. If I had the market coming back down here, it would have been a big risk. So again, short term the same. You look at the weekly, you look at the daily to determining the move, and then scaling back down to the hourly maybe, or even less, to determining the levels. And some of the things I do, as I mentioned, you do your Fibonacci's, you do the levels, scaling down, and as you see, one of them would have been maybe here to trade long. It all depends on your style of trading. It's all relevant to the same thing. You look long term and then scale down until you find a level. The long terms will give you an idea, and the idea was clear. The pound, the US pound, the US yen is going up, and the next thing was to determining what level is safe for me to get in.